Thank you, Micky, for joining us today for the Multicoin Summit. Very much appreciated, and it's great to be here with you.
It's good to be here with you with no masks and in real life.
Yeah, I know. Hopefully, we'll all get to do this live, but we're trying out the virtual summit this year, and I think it'll be an interesting experiment.
Yeah, I expect that the next year we'll have all of us will be in an Oculus and we'll be in a virtual room having one of these summits together. We'll see how it goes.
That would be super cool. So, Micky, you've been investing in fintech for over a decade now, and have had a number of very significant successes. What are some of the major themes that you've seen being successful in fintech? Has it been things like expanding access to markets? Is it better underwriting models? Is it different ways of bundling or unbundling risk? What do you think has been the major driver of all the success in fintech over the past 10 years?
I think it's all the above, but if I had to synthesize it even more, I would just say it's user experience. It's all about user experience. I mean, remember how difficult it was to buy a stock 20 years ago, or even 10 years ago. E-Trade didn't change their platform since '99, and it was 2012, and nothing had come to market. Remember how difficult it was to buy one Bitcoin in Mt. Gox or any of those platforms back in 2011 or 12, and how easy you can do it now on a swipe on multiple platforms. So I think the whole driver is the simplification of the user experience and making it much more invisible to the world. When that happens, and when you have teams that were willing to navigate that creativity and do new brands around it, it's when we got really excited to what we're seeing. Does that compromise? That has all these aspects that you mentioned below in different ways, but I think it all starts by making it easier for people.
Mm-hmm. Make it more accessible, letting more people access or not feel intimidated.
Yeah.
As well, I think is really important.
Correct.
And how do you think DeFi and what we're seeing in crypto plays into that? Because the user experience isn't really friendly yet, right? But at the same time, I think one of the most promising things about DeFi is that it expands out access because of the permissionless rails, right? And global markets being able to use a product rather than it just being national. Mm-hmm. So when you say user experience there to expand out access, do you think DeFi still has a shot of competing with more traditional fintech, even though the user experience is not as smooth and not as easy?
So, on every investment that we make at Ribbit, the first question we always ask is, who's the customer? Who's your customer? And in DeFi, it's hard to answer who's your customer, because it's a very broad word that can describe so many different things at the same time. Mm-hmm. So I believe that we gotta probably double click there and a little bit and say, what is it that DeFi is trying to solve and for whom? And depending on that, it will evolve over time to different segments. Some segments it will succeed, on some others it won't. So, for example, I use the example of the internet in general. You had two models of the internet. You had the American model of the internet, which is open source and let it be and let it grow anywhere at any time. You had the Chinese model of the internet, which was let it grow but restrain. And I will tell you what are the boundaries. Which one is more successful? They both are very successful. They both have brought multi-billion-dollar successes companies to the world. They both have brought penetration of the data information and news and content and access to democracy of access to information in censor, not censor is a different question, but just access of information. So I think the Western model of the world of open protocols has shown success. So you will hope that DeFi becomes that flag, that open source protocol to run financial transactions in the world. But if we are right, it will probably deviate in so many different mini verticals that it will have to be invisible. It will probably be the backbone that runs something much bigger, where on the front end, you are transacting in different protocols, but they just have different meaning to people, and they become invisible. So I expect that to be the future of DeFi. It will be, we've gone and went from the .com, talking about .coms, to talking about different aspects, and we don't talk about .coms anymore. It's because it's software it has eaten the world.
Yeah.
So DeFi will probably, we're in the early innings of this, and it will probably have a much better description by the end of 2025 or 27 on what this looks like.
Yeah, I agree. I think you said something there that was really interesting about it being the backbone and there being more localized access points. And so one vision I think that could exist for DeFi in the future is that it's the back end for financial services globally. And that's where people can go to offload risk and transact in a trust minimized way across jurisdictions and not having to trust anybody. But then locally, there's different front ends that provide, they do the marketing to end users, they provide support, they work with regulators, and they do everything that's important for the end user. But they're really just front ends to this giant global backend system. And I think that could be really powerful because that backend could then have the best economies of scale possible, right? And then you reduce the barrier to entry for what I would call then a financial services or a fintech company to just building the front end. And you don't need to worry so much about a lot of the complexity that most average people don't notice about how hard it is to build a fintech business. Yeah. You need to think about all these different moving pieces on the back end. But if the protocol can take care of that for you, then I think we can see a lot more innovation in how these products are delivered to end users, different ways to bundle them, different ways to market them, different pain points to solve that right now is really hard to do because you need to do all this back-end work first. And then once you do the back-end work, you're already a huge, big company, and it's a lot harder to innovate from that position.
I agree with you. We see it like, listen, we're in a weird world for many reasons, right? Number one, you have multiple countries talking about having their digital version of their currency. Number two, you are debasing the currency daily by printing more money, which means negative interest rates. And that's an environment that no one history hasn't seen. What do you do when you have negative interest rates? So what it's just telling you is that the creativity that this set of factors generate in the economy, in the system, for innovation, for better transaction flow, for better user experiences, for better use cases, will likely accelerate, not decelerate. Because all of these factors are making money too burden to be holding it. So I do think that we're going to see a massive movement into the DeFi space. The biggest concern for all of us is going to be regulation, because it will need to be regulated. Because as long as the money is being printed by governments, you will have to have regulation over the DeFi protocols or the DeFi services. And that's a decision that time will tell how that ends up being playing out and how the parties agree on how this works. But listen, when we look at Bitcoin and we go back to 2010, the first time I bought it, and the only thing you could do with it was go to Silk Road or be naive enough to order a pizza. And you'd see how it's been a decade since I bought my first Bitcoin and where we are today about bit licenses and regulation and support and understanding the OCC approving banks to custody this type of assets and market makers and the future markets. It tells you that it's doable, but it doesn't happen overnight. So DeFi will probably have a similar cycle to what Bitcoin has had. And it's a perfect example of a 10-year cycle. Let's see how faster or the same cycle it will take here.
Yeah, I think there's a lot to be learned from the experience of early Bitcoin. And a lot of that can be applied to DeFi, but thankfully I think we get to stand on the shoulder of giants as well. And a lot of the track has already been laid, right? We have a bit more clarity now than we did then about securities laws and how they apply to crypto, though not as much as I would like. More clarity, I think, would create a lot of value. But we also have much more user awareness and knowledge about these protocols. So I think some of these incentive games that are being played right now, some of them are silly, right? Like you can't have 1,000% APY on your yield farming thing forever. Like that's clearly a gimmick. Maybe something short term. But I think there's something there with these incentive games to bootstrap liquidity and get these DeFi protocols really going at significant scale.
Yes, but at the same time, understand that it goes back to the question I was telling you, who is your customer? When you're doing yield farming, it's clever, it brings liquidity, but you're servicing one particular type of customer. Is that the customer that you're going to build your business upon, on top of? Who knows? But there's always, since when PayPal started in 1998, they will give you $10 if you open an account, they will give you $10 if you brought a friend. So yield farming has always existed in different ways in every single protocol out there or every single new user experience, as long as you know who's your customer. Where the DeFi needs to improve is who are you going after? Because then the yield farming will be much more efficient. And we're slowly getting there. This is better than the ICO model. Yeah. And there will be a better version of this in the next 6 months, I'm sure.
Yeah, I think the who's your customer question is key here, because a lot of the most recent things that I've been seeing is people are appealing to what I would call hot money that comes in, collects a bunch of yield and leaves. And I think that better designed programs are needed. I actually wrote a post about this recently, exploring the design space of liquidity mining and incentives in crypto for DeFi protocols specifically. And thankfully, we've seen a number of teams start adopting it, where they start locking up the rewards. So it's kind of like, to use the PayPal example, if you invite your friend to PayPal and you get $10 and they get $10, but they can't necessarily use it immediately, just to reduce the amount of hot money sloshing through the system that just comes in, takes all of your marketing budget, and then leaves.
And that behavior hasn't changed, by the way. One of my mentors was the CEO of Citibank from 1978 to 1999, John Reed. And Citibank was the biggest branch network in the tri-state area, in the East Coast, right? So, and he always said to me, listen, every time we needed more liquidity in the bank, all we had to do was we raised the interest rates some basis points, and we knew that the hot money will come running through the doors. We knew how much hot money was there, we knew who it was, and we knew what it would take to lock them in and keep them here for 6 months on a CD so we can go solve our liquidity issues. That same behavior, it's what you're describing, it hasn't changed. And it won't change in humans. Yeah. But that doesn't allow you to build a business, but it's a great driver to scale your business.
Yep. So that's really interesting, and you brought the Citibank example and also the PayPal example. And I think there's a lot that DeFi can learn from more traditional financial companies like Citibank or fintech companies like PayPal. What about the other way around? Is there something that you think the more traditional financial services companies or even the fintech disruptors can learn from what's going on in DeFi?
I think there is a lot for them to learn. They're caught in a situation where the incumbents in the industry don't know what to do right now. Like, think about it this way. This calendar year, PayPal's market cap has generated more appreciation in dollars than the entire market cap of Goldman Sachs.
Wow.
So you're in Wall Street, you're one of these big firms, and your market cap in the ranking of the companies is just decreasing and decreasing and decreasing. So the innovator's dilemma hits you, and you're like, what do? Do I innovate? Do I buy something? Do I do something different? And when you go and have the conversation, let's go and do more in crypto, they're like, not yet. So I would say that it's gone from 8 years ago, it was no way, this is a joke. 5 years ago was, this is a joke. A year ago is like, well, I'm buying personally, but I cannot push this inside my company. And now that you got all regulators starting to be more constructive, no one wants to risk their job to do this. So the innovator's dilemma is hitting them in multiple ways. You will argue that it's probably a little bit early for all of them to be participating in this. But if I were any of them, I would have a team of 10 to 30 engineers, just being either a market maker, a market taker, or playing with these protocols on a daily basis, with some money from the treasury, or some money from the partnership, or some money from the balance sheet, depending on the structure, just to understand what's going on. Because they will be able to solve use cases that they can bring to their organizations. But right now, none of them are doing this. And when you ask them, no one wants to make the decision.
Yeah, no one wants to take the career risk. And
No.
it seems that the career risk of investing in crypto has been decreasing pretty steadily over time. We had a pretty big moment earlier this year when Paul Tudor Jones announced that he had like a 1 or 2% position in Bitcoin, and we're seeing more institutional managers trade in Bitcoin and in crypto generally. I think Renaissance is now also trading Bitcoin futures. How do you think that's going to play out? Where do you think the tipping point is? Right, we've seen Yale has invested as well in crypto-specific funds, and so we're seeing a lot of these big names come into the industry. Do you think there's a tipping point that's going to be hit?
I think it's a sum of tipping points. I don't think there's one. And we're always going to look back on the Monday morning quarterback and realize, oh, that was a tipping point. But we're not going to know it at the moment that it happened. So what I will say is that we are closer than ever. And the odds of, for example, Bitcoin failing as a thesis are just decreasing exponentially faster than others. Ethereum, Solana, other protocols will still have their biggest highlight day in society. It's still to be out there. It's not yet.
Still to come.
Still to come. But in Bitcoin, as their concept of what they do as a store of value thesis, to me, it's already a given. It's just a matter of how big and how fast it's gonna get to where it needs to go. So I think it will come from a sum of different events. And I think it's a sum of macro-political events, geopolitical events, monetary events, and use case. And it doesn't solve by just one of these. It's probably a bit of the other ones. In the last 6 months, we had 3 of them at the same time. The halving of Bitcoin, and the moment that happened, you could not have made it up better. Like in the middle of COVID, at the same time that the Fed is printing money, at the same time that the world is going bazooka for something different, and yet they survive and it's up from where it was. Like you just know that we're gonna look back and realize the same way the people point the peak of the dot-com bubble to the merger of AOL and Time Warner, but you only looked at it 6 months later. I think that in the next year, we're gonna look back and realize that that moment happened, but we were not all seeing it until 6 months later.
Hindsight is 2020.
Yes.
So Mickey, one interesting trend we've been seeing recently is what I would call the nationalization of the internet, or kind of the splintering, right? And China already had their own internet model for a long time, but now we're seeing the U.S. take these actions against TikTok, and I can't download WeChat on my phone anymore. And I would expect that other nation states are going to move in this direction as well. And something that I think is really exciting about crypto is that these blockchains are truly international. They don't. They will be very hard to segment into these national internets. And so one really interesting opportunity that I see for blockchain is that it can be the only way to build a truly global technology product that can be accessible everywhere. How do you think about that type of an opportunity, especially given that this environment is so volatile and we don't necessarily know what's going to happen next?
So it's a good question. I think that the internet being nationalized, it's a massive phenomenon that most investors are not spending time understanding. It didn't even start with China was the biggest one, of course, but it didn't continue with the U.S. The second natural one was India. India, before the US, shut down 47 or 67 Chinese apps from the country, and no one blipped. No one said anything. And so I think the world woke up and said, wait a minute, if 1 billion people are not complaining that they got shut down from 67 apps, what can we do? And there's no coincidence that aggressively afterwards, with the WeChat and TikTok here, and we're seeing the same in Brazil with some noise. And so I think we're going into a trend of a nationalistic internet. And it's becoming a critical asset of a country to control their internet, which is going to hurt the industry dramatically, much more than what we all expect. Because suddenly you're not going to be able to have a company sitting in Mountain View and not have offices locally or regulated locally. And you've seen glimpses of this. WhatsApp payments haven't been able to launch in India for a long time because they didn't have a local office. So this trend is big, and I think it's a trend that we have to pay a lot of attention to. I think blockchain can circumvent it, as you said, but I don't think it's that easy. Look at how China has blocked the Bitcoin. Even it's an open protocol, you could do anything you want, but still, it's not. You could trade, you could find it, but it's in the gray markets or the dark black markets. It's not an obvious thing that you can do publicly and openly. So I do believe that geopolitics will play a factor in this, and the protocols can be Switzerland in this sense, because since they're not one entity or another and they're decentralized, they could be treated more as a neutral party. But that will make that a lot of the teams will have to consider where they're based and how control they have or not of their protocol. Because the same way you've seen the last week how Washington has changed their mind about ByteDance on, is it truly not Chinese, is it Chinese, is the AI Chinese, or the AI not Chinese, or engineers? You could argue that they could say the same about Ethereum, or Solana, or any protocol, or any DeFi. So I think this is more complex, and as an investor, we have to be much more careful on how we navigate this than what we all think. But generally, it's a more neutral stance than a company is.
Yeah, that's what I'm most excited about for the opportunity is by being neutral, I think you can unlock the international economies of scale that are really, really powerful. Because maybe you can move capital across economies using blockchains and it being neutral, where moving that capital across in conventional methods is harder to do because you have to trust somebody. And so I look forward to blockchains providing this neutral infrastructure layer for a lot of these tech products, whether that's financial services products or also different Web3 type products, data storage, social media. I think that there's a lot of opportunities there. Basically, everything that a big tech company is doing that you think has economies of scale from being cross-border and being truly international, but a government may not like or could try and hinder to promote local companies and promote local industry. I think that's an interesting opportunity for blockchain-based business models.
Well, we have a great experiment to see over the next year, right? China, with their centralized EU1 blockchain, has announced that they will connect to a few other layer one protocols, right? So to build smart contracts. That's going to be a great example to see, because this is the way that they figured out they want to have a controlled currency, but sitting on a decentralized network that can grow use cases worldwide. And that's their plan to have their ambitions to be a global system. I think it's very smart. I think it's the most innovative aspect on geopolitics that I've seen in over 20 years on how to get currency distributed and value transactions created. It's going to be very interesting to follow.
Yeah, I think the currency wars will be fascinating here, and they're about to heat up, where we're going to see, obviously China has said we need to be first in launching a currency on a blockchain. The US, I think, is paying very close attention to this, and we had a statement recently from the ECB as well, talking about how they want to have euro-denominated stablecoins out there in the world. And actually, one vision that I have for the future is we're going to see a lot of smaller currencies start to die out. I think we're going to see the big national currencies like the euro, the dollar. I don't think those are really that much at risk compared to smaller ones. And I think we're going to see permissionless currencies, things like Bitcoin, take over significant market share. But at the same time, I think the largest currencies in the world will also potentially gain market share, all at the expense of the smaller currencies out there.
I differ a little bit. I expect a world where we see two or three very large worldwide currencies, not five. And we're going to have two, and it's going to be China and the dollar, unless something dramatically changes. And we'll probably have Bitcoin as a third one over the next few decades. But I still see every country having their own currency because it's a matter of national security to be able to just print your money out of your own problems. I don't think that's going to change, and it might even change the way we think about the euro over the next decade. But I have a different opinion than yours there.
I think we are going to have a reckoning for the national security argument of I want to be able to print my own currency in order to get out of problems. I think we will see notable currency failures over the next 10, 15 years.
Yeah. I've seen many in my country already. In Venezuela, I've seen 4 times the currency change, and you just create a new one, print it out, and it's until it doesn't. So I think that's not going to stop.
That'd be really interesting to talk about and explore a little bit deeper with Venezuela. Is just when they switch currencies and they make a new one, why do people keep sticking with it? Like, why do you think they don't, try to use some other currency? Because I know in Ecuador they just switched the U.S. dollar entirely, right? And that's just what they use. Is there something different there that you think is driving that?
Yeah, it's when you have big governments, and big governments that control big pieces of the economy. They want to have controls, and you control the economy when you control the currency. How much you print, what's the value, what's it worth, what can you get for it? So in countries like Ecuador, where they're small countries, they don't have a strong economy. The central government doesn't own many assets that they prints wealth for them. You could have these experiments work for 10, 20 years. Argentina had it for a long time. It worked for almost, I think, 14 years until it didn't. And they had to debase it and start building their own pesos again. So these experiments work for some time until they don't. But in the majority, I have a wall in my home office, where it's full of all the failed bills in Venezuela since the formation of the republic. And we've changed bills 12 times.
Wow.
Since 1811, so that gives you an idea.
That's quite a lot.
Yeah.
So, Micky, one thing we've been seeing recently in crypto is a lot of forking of open source protocols, right? The most recent example that gained a lot of attention was someone forked Uniswap to create SushiSwap and tried to pull a bunch of liquidity out of Uniswap. And this was really controversial because on one end, this is all open source code and it's out there, it's free, it's the ethos of crypto. But on the other end, you have teams that spent a long time perfecting their technology, building it, investing a lot of time, money, energy, blood, sweat, and tears, building their product. And then someone comes along and just takes it and says, I'm going to tweak this one variable, or I'm going to add this one piece to it, and I'm going to outcompete you, or I'm going to actually even put in an incentive for people to transition over and reward them disproportionately for doing so. How do you feel about that? How do you look at forking in financial services or in DeFi?
Growing up in Venezuela, for whatever reason, a lot of the movies that made it to the TV there were always all Westerns. I'm guessing the TV stations those were cheap movies to buy to fill hours. And I always use this analogy where it's like the Wild West, where you had a small town, there was always one saloon, there was always one hotel, but there were always 2 or 3 banks. And anybody could open a new bank and start offering you interest rates or a deposit. I have a bigger vault than yours. I have a shinier branch. I'm more liked in the community than you are. And financial services, historically, forever, have been a commodity service. There's nothing original about the industry, and there's nothing that cannot be replicated or copied or forked, right? So I'm not surprised. This has happened to every single aspect in history of financial services, always. A bank copies another bank, they get the same license, they open across the street, and they can offer the same rate, and then you gotta decide where are you walking in. So over years, over decades and centuries, what's mattered the most is what is the value of the brand that people trust. I can show you 2 balance sheets today with no names, same assets, same liabilities in size, same net worth, more or less, same profitability, but one bank could be worth 3 times more than the other. Why? Because the brand. They trust the brand more. So I think we're still in a phase in forking and DeFi where the brand value has not yet been completely built. An example where this has been more successful is Bitcoin. A few years ago when Bitcoin was forked, how many times? 5 times? 6 times?
Many times, yeah.
And they've all failed so far. Why? Because at the end the brand or the hash rate or the players stay with the original one, the main one. We're not there yet in DeFi. There's no brand. There's no acknowledgement of a brand that wins. There's no acknowledgement of a user case that has built enough trust and wow experience to the consumer or the user to say, no matter what somebody else copies, I trust this one. We're not there yet. And until that happens, it's a Wild West. So I will expect much more of this to happen. And I will expect that it will take the entrepreneurs and the teams, going back to people and humans that we talked so much about at the beginning, we will have to start to see them become much more a face of trust and brand on how they build this. Now, that's going to be a catch-22 because if you do that, then it's not DeFi.
Yeah.
So I still don't know, and it's for all of us to figure out as investors, as historians, as people that play in the space, is what would it take for some of this to be the trusted brand? Because until that doesn't happen, we're going to see a lot of forking and copies and little tweaks here and there happen regularly.
Yeah, I think the Bitcoin example is really interesting because the way I see it, it's all about who owns the customer relationship. And with Bitcoin, it is Bitcoin that owns the customer relationship. It's not anything else. It's I want to own Bitcoin because it is Bitcoin, right? And everything that conveys. And with DeFi, I am not so sure that anyone has a relationship with the protocols. You know, some of the early builders and enthusiasts and very loud community members do, and that's reasonable. But I think most of the users don't care. They just want the best price. They just want the best liquidity. They just want the best product. And we've also seen these aggregators emerge that sit above these different DeFi protocols, and they offer up the best rates, and they go and they split up your order across all the different venues or whatever else. And I think that those aggregators really might own customer relationships more than the underlying protocols. And so it's harder to make the argument that brand will matter. Whereas with Bitcoin, I think like the Bitcoin brand is Bitcoin. Like that, it's not the code. I don't think the code is actually as important as the social contract of the brand.
Yes, and it applies for everything. Because if you think about even the internet before in the early 90s, and you talk to people at Cisco, and when they were building the routers, starting to build the routers, they were building routers for 5 different protocols. TCP/IP was one of 5. It was not the one. One day they were like, guys, we gotta stop this. I cannot build for X25 and TCP/IP, and I cannot. Like, we gotta sit down and figure it out. What's the protocol? And until people started to trust the brand, TCP/IP, and then they became. So I think this brand, even open protocols, the trust and the brand matters. And until we don't see that happening in DeFi, because DeFi is not a brand, DeFi is just an action. We're going to have a lot of this coming along in the markets.
Well, it leads to a lot of interesting questions that we ask ourselves about defensibility and moats in DeFi, whether liquidity is really a moat. How do you think about brand as a moat? How do you think about execution as a moat? And then that moat question also helps us think about the ability to extract profits. And as investors, that's very important to us, that the thing that we invest in accrues some value. And I think it all kind of, it's a string of thoughts, actually. It's a string of dependencies where you can't expect it to accrue profits or accrue any value if there is no moat, because then it can get forked to death. and there's no ability to protect your user base or protect the value there. And then if you're thinking about forking risk, you need to then go one level down and ask, who is the customer? And who owns the customer relationship? And what problem are you solving for the customer? And not just the current customers. I think that's actually a very frequent mistake that a lot of people in the industry make, is they just look at the current customers. And I think that is the wrong way to look at it, because if all we have are the current customers, we failed as an industry. Like it doesn't move the needle. It doesn't help the world. It doesn't accomplish anything. We need to look at who are the new customers. I think about this with developers all the time too. People talk about almost all the developers in crypto are building on Ethereum. I'm like, that doesn't matter. It's a rounding error. There's maybe 10,000 developers right now in crypto, maybe 100 on that order. I want to know, where will the next 10 million or the next 100 million people go? So a bit of a ramble there, but just trying to connect these thoughts of moving up and down the stack of where will value accrue.
I couldn't agree more with you. I think that your role in Multicoin becomes critical for this as an investor, to go and figure it out, where are these opportunities, where is the risk return that makes the most sense to it. But if you use this framework to invest, I'm pretty sure you're going to find it. And maybe it takes a few tries, and maybe it's a few mistakes until you find it. But I believe that the framework that you're articulating is the right one to go find this. And it has worked historically in every other concept. This is not different. This is much more innovative, bigger scale, bigger opportunities. But yet, human behavior and human psychology has always been the same. So that's what matters the most.
Absolutely. Micky, you've recently raised a few new funds for Ribbit. How are you thinking about crypto as one of the opportunities to deploy some of that capital into?
As you know, we've been deploying to crypto since 2012. I'm not sure if we were the first one, but we're likely one of the few first institutional funds that bought crypto positions into the main funds. We have been doing it on every single one of our funds for the last 9 years, 8.5 years. And besides that, we've invested in companies, right? And particularly in exchanges, Coinbase, Bitstamp, Sapo. But I will say that we expect to make more investments in crypto, but we're trying to answer the questions in the same way that you're trying to answer them, which is, what is the moat of this business? And how do we make a multi-year bet that we can see how we can imagine how it plays out, versus trying to gamble on what's the hot thing today. Every time an investor makes a bet in a short-term hot thing, you may time it well, you may time it wrong, but there's enough Teslas in the world and Nicolas to know that how those things go. Some of them go well, some of them don't. The thing here is, there's nothing more disruptive in financial services than what's going on in DeFi. There's a lot of add-ons to make the experience better. A lot of the incumbent banks will not be around by the end of the decade because others will have taken their places. But there's nothing as disruptive as what's going on with decentralized finance. And so if we want to be the best investor in this category of the intersection of finance and tech, no matter where we are, we will be very active in DeFi and we will be participating in it. But it's not obvious that it's a company or a token, or is it partnering with Multicoins or to make investments. I think we'll do all of the above over the next decade.
Thank you so much, Micky, for joining us today. Very much appreciate it and appreciate your support. And it's been great working with you.
Likewise, I look forward to doing more. Good luck on this summit, and hope we get to talk more about DeFi next year.
Absolutely. Thanks again.
Thanks.